Did you know that the banking system operates entirely differently depending on how much money you have? Inside the exact same bank building, your account balance determines whether you are treated as a minor inconvenience or a prized asset. Today, we break down the 8 levels of the financial tier system, moving from level 1, where you are actively penalized for being broke, all the way to level 8, where the entire system bends to your will. Let's dive in. At level 1, your account is negative. Whether by $4 or $400, the system responds identically. An automated $35 overdraft fee hits within hours. If 3 small transactions clear while you're in the negative, you suddenly owe $105 in fees. The math is brutal. Because you don't have money, you are forced to have even less of it. You try to use your debit card at a gas station, and it declines while a line forms behind you. The bank offers overdraft protection, which means they will cover the transaction but still charge you $35 for the privilege. Banks collect billions annually from these fees, predominantly from chronically overdrawn accounts. At this level, you aren't a customer. You are a cost the bank is trying to recover. Level 2, low balance. You've pulled your account back into the black. You have a few $100s, but it rapidly drops right after rent goes out. Now, you are hit with a $12 to $15 monthly maintenance fee because you don't meet the minimum balance requirement, which is often $1,500. You are literally paying the bank just to hold your money. Your savings earn a microscopic 0.01% interest, while the bank lends your exact deposit out to other people at 7% to 24%. If you apply for a credit card, you'll likely only qualify for a secured card, meaning you must deposit your own money as collateral to borrow against it. There is no relationship here. You are just a small number handled by an automated script. Level 3, stable income. Something changes. You get a steady job, and a predictable direct deposit of $3,200 hits your account every 2 weeks. The bank's algorithms notice this pattern change instantly. Suddenly, Real Credit Card offers start arriving with actual limits up to $3,500. When you apply for a small $5,000 personal loan, it gets approved smoothly within 48 hours at an 11% interest rate. Your monthly maintenance fees disappear because your direct deposits trigger an automatic waiver. For the first time, the bank functions the way it's supposed to. You are now a recognized, revenue-generating customer. Level 4, growing savings. Through ordinary discipline over a few years, your financial profile changes. You have $18,000 in savings and $22,000 in investments. You pay off your credit card monthly, making high interest rates completely irrelevant. The bank's risk models now view you as highly safe. Your credit limits automatically jump from $4,000 to $14,000 without you even asking. When you buy a car, your loan rate drops to 6.8% because you've proven lending to you is low risk. Because money is now cheaper for you, your wealth begins to compound faster. If you threaten to move your accounts, a human will actually step in to try and retain you. Level 5, high savings and assets. Your total assets clear $150,000. You are now in the top tier of standard retail banking, and the customer service reflects it. When you call, you skip the long queues and route directly to senior agents who possess the authority to waive fees and make immediate exceptions. At this tier, a dedicated, named banker is often assigned to your account. Pre-approved mortgages and premium reward credit cards flood your inbox. The institution is no longer just holding your balance. They are actively competing for your future business. You are officially flagged in the system as a preferred client. Level 6, high net worth. With investable assets crossing $500,000 to $1 million, the bank stops being a place you visit and becomes a service that comes to you. You are introduced to wealth management, a packaged service coordinating financial planning, tax strategy, and estate guidance. The conversations change entirely. They are no longer selling you basic products. They are consulting on your life goals. If a wire transfer gets stuck or a fraud alert freezes your card, it is resolved in a single phone call with someone who has real decision-making authority. Internal systems no longer label you a customer. You are an asset. Level 7, very high net worth. Above $5 million in assets, you gain access to a private tier of banking that isn't advertised on any website. You get exclusive access to alternative investments that require accredited investor status. Your mortgage rates are negotiated meaningfully lower than anything offered to a standard retail customer because you represent zero risk. Your advisor is no longer a generalist. You have a dedicated team of specialists coordinating your entire financial life. The standard retail rules, waiting periods, and fee structures simply apply differently to you because internal bank policies grant extreme discretion to accounts of this size. Level 8, Ultra Wealthy. This is private banking, an entirely different product from wealth management. Your private banker manages fewer than 20 relationships total. They know your family, your philanthropic foundations, and exactly what you are trying to protect. Every single deal here is bespoke. Interest rates are negotiated, not looked up on a chart. Transactions that take ordinary retail customers 2 weeks are quietly cleared internally in 48 hours. Banks don't break laws, but they exercise every legal ounce of discretion in your favor. The system that was automated and cold at level 1 is now deeply human and engineered to say yes. You are a cornerstone relationship, and losing you would impact corporate performance reviews. Those are the 8 levels of banking and wealth. Which level are you currently navigating, and what is your target for the next year? Let me know in the comments below. If you found this breakdown valuable, don't forget to like and subscribe. See you in the next video.